Our guest host for Market Day today is Kieran Kelly from Sirius Fund Management. But joining us now for more on what small businesses can expect from tomorrow's federal budget is Mark Bouris, Chairman of Yellow Brick Road. Mark, always good to chat to you. Thank you. We'll talk a little on banking reform in just a moment. Can I start by asking you, though, what you think small businesses will be looking for when the Treasurer hands down the budget tomorrow night?
Well, more reasons to invest more money in more capital expenditure to get it, and to do that you've got to give them a tax deduction. That's the bottom line. So small businesses need to be encouraged to spend more money. That's the first thing, and they're not going to do it unless they're going to get a tax deduction straight up. And small businesses need more things to encourage them that their business is going to continue to grow at the top line. So what's the government going to do that's going to get the economy up and running as opposed to just the mining companies? So what are they going to do for all the other sectors that are lagging behind? We've got a three-speed economy at the moment: mining, banking and everybody else. So the everybody else piece has got to be attended to.
So I'll just let you get your earpiece there. You're hoping, of course, that any spending is focused on productivity. There are critics who say if spending's directed in the wrong way, and we have, for example, greater pressures on inflation, then that just puts pressure on the RBA to lift rates and for example, the Australian dollar to climb. And the last thing your industry wants to see is any further rate rises that may be deemed unnecessary.
Absolutely. Well, consumers don't want to see any more rate rises, and I accept that there's the proposition that you can't have any more government spending because all that's going to do is fuel inflation, which in turn will put up interest rates, or ask the Reserve Bank to put up interest rates. But there are segments of the economy which are doing dreadfully. And, you know, like we keep seeing how well Australia's doing, but really we're getting a carry trade from the rest of the economy is doing well, like banking and mining. So what about the rest of the place? And most people are employed in the other parts of the other parts of the economy, the third part that I mentioned before. So surely there can be some discrete spending that can help those parts of the economy that aren't doing well, particularly small business, without actually making it an expansionary type fiscal policy.
Mark, let's talk about the banking reform proposals that were released by the Senate Economics Committee on Friday after their inquiry, which began in October late last year. Can I get your initial impression of them? Were they tough enough?
Well, they were broad enough. I don't know if they were precise enough. I mean, I do like the aspect of revisiting the exit fee ban. The exit fee ban, well-intentioned by the government, but the legislation actually has quite a broad effect to the extent it actually affects non-banks quite a lot. And to some extent that exit fee ban, as it is legislated, as it is drafted, may well have the opposite effect to what the government intended. That's the first thing. The second thing that I really am disappointed in, I guess that they've recognised the issue, but they didn't address the answer to it. They didn't address the solution. Is this: the residential mortgage-backed security system, or our system of securitisation, needs to have a number of things done to it to make it more attractive for people to enter into it. The first thing is that it needs to be regulated, and I don't mean to start bringing a whole raft of legislation in, but it's a largely unregulated environment. I mean, any environment that post-GFC, which is a major raiser of funds for our banking system in this country, which remains unregulated, to me sounds like a nonsense. APRA should be given a good solid role in relation to it. We should have more homogeneity in terms of what the product looks like in the residential backed mortgage security industry. It should be minimum standards started to apply. There should be people that are licensed, non-banks and banks, to make it a much more attractive environment to get into. With homogeneity, you can actually start to bring down the spreads, which makes it much more attractive again in terms of it being an alternative source of funding that can ultimately benefit consumers. I was a bit disappointed that the precision didn't come from the inquiry. Whilst they recognised the issue, the precise solutions didn't come out of it, and that's something that I reckon really needs to be addressed. That RMBS system still doesn't look right. For example, what about a permanent facility from the AOFM that can be put into the RMBS system, as opposed to every now and then the government struggling to manage to find 7 billion or 10 billion or 14 billion, as has been the case in the past.
So,
a permanent position.
Can I just, because it's a complicated area for the uninitiated, but you're saying that, and I think in the inquiry there are a number of people who put forward an example in Canada where there is government backing of the securitisation market. Walk me through that.
Well, I don't know if backing's a big call, because that becomes a permanent liability of the government. And I'm not suggesting that we employ the Canadian model, but because that's a big ask. But we do need a far more active environment by the government in the residential mortgage-backed securities market. I mean, just to talk about it and to say, look, we're going to give you some backing with the OFM, we're going to put another $7 billion in or another $4 billion, in other words, we're going to go and buy the product. This is the government speaking. That's not enough. There needs to be far more recognition of how they can streamline residential mortgage-backed securities compared to where they were pre-GFC and during the GFC period. Right now they're just sort of floating around out there, people trying to work out how can we get this industry back up and running so we can get more non-bank lenders, you know, like the old originators, how we can get them back into the system so that they can start competing with the banks again. Because what it comes down to, what the Senate inquiry was about, how can we get more banking competition out there, particularly in the lending environment. There's only one way. That is to get the non-banks back into the system. How do we get the non-banks back in the system? Then we've got to encourage them to come back as residential-backed mortgage security issuers. How do we do that? We've got to make it homogenous. We've got to have minimum standards. We've got to make available licenses to non-banks and banks alike to issue these securities. And we've got to have more APRA involvement, more regulation around it, so that the buyers of these securities, you know, the big funds out there who buy these securities can feel like they safely know exactly what they're buying, and they're buying the same thing over and over and over again every time, so that we can bring the margins in to make it more much more secure and much more attractive.
If we look at the current marketplace now, the major banks have almost all of, and I know that's changing a little over the last 6 months, but all of the market share for home loans. Education must be at play here, because there are a lot of other smaller operators, whether it be credit unions, that are offering some amazing deals and yet aren't getting any traction, and that's in the current environment.
And that was one of the recommendations that the committee did make, a far more promotion and education by the government of the various alternatives that are out there for people who may want to invest or more importantly, put their money in deposit. And the fact that these alternatives are secure. The mutuals, for example, do have the blessing of the government guarantee on their deposits. And most people, I mean, you know, the educated do know, but most people don't realise that they put their money with a credit union, a building society or a mutual of any type, that they do have the backing of the government in terms of that deposit. And to encourage more people to put more money on deposit with the mutuals gives the mutuals a bigger balance sheet, which means the mutuals then can have more money available to lend to new customers. And mutuals, generally speaking, lend at a lower interest rate, and when you put your money in deposit with them, generally pay you a higher interest rate. So there's a force already available to be reckoned with.
Steve Munchenberg from the Australian Bankers Association on Friday said that he had some hesitation about the recommendation that banks for the following year after a customer leaves, your previous bank's responsible for the transfer of direct deposits, etc., and account information, if not a portable bank account number. That wasn't part of the proposal. What was your reaction to that recommendation?
Well, I generally speaking don't react to what Steve Munchenberg said, because he's representing Australian banks, particularly the four major banks. I guess that is to be expected, what Munchenberg's going to say. He does not want to accept anything that's going to take competition away from the four banks, because that's who employ him, and his job is to make sure that, as a representative of the Australian Bankers Association, that business stays with the four banks.
Do you see problems with portability issues?
Yeah, there are going to be issues with portability. No one's suggesting that this is a magic pill, but the concept of portability is a very, very good concept and a very solid concept, and is being deployed in other places in the world. What needs to happen is someone to come up with a solution, as opposed to saying, look, the whole concept of portability doesn't work. Let's go and get a solution that does work. There are solutions out there that do work. But until we get the banks to agree to this, then nothing's going to work. We need their cooperation, and not their acquiescence, but their actual cooperation for this to work, and for someone like Steve Munchenberg to get together with government and the non-bank sector and the mutuals and try actually work out something that does work, instead of just sitting back and saying, oh, this doesn't work, let's scrap it.
Yeah, I want to know, how much weight did you put on another recommendation that said the definition of bank should be more liberalised? Credit union may be able to call itself credit union bank. I mean, it seems like a simple recommendation, but a number of people gave testimony at the inquiry calling for that.
Well, mutuals now can call themselves a mutual bank under the legislation, depending on their size, etc. I think there's something like 20 mutuals currently qualify to be called a mutual bank. And I know the Treasurer has already talked about that. The question is, I also agree on the flip side. I don't know whether everybody should be able to call themselves a bank. We don't want too many people to be able to call themselves a bank. Quite frankly, who wants to call themselves a bank anyway? I mean, it's sort of like it's a public relations disaster day one. Banks are banks. We know who they are. We know what they do. They're very safe. They're very secure in this country. Extraordinarily stable. Make a lot of money. That's their market segment. Mutual banks. The mutuals want to call themselves a mutual bank. If they take that view, they can currently do that. And that's already been proposed by the government. Whether anybody else should be called a bank, I don't think that is the case. I think we should leave the ability for other people to call themselves a small bank or a people's bank or some new structure. Unless they meet APRA's requirements, I don't think people should be allowed to call themselves a bank. And by the way, to compete with the banks at the moment, you don't need to be able to call yourself a bank. In fact, people actually want to go to something that's alternative to being to a bank.
Something that's not called a bank. Well, look, good on you, Mark Bouris. Thank you for making your time available to us. Mark Bouris from Yellow Brick Road there, talking on the issues of the budget and the banking reform package announced on Friday. Good on you, Mark. Thank you. Bye.